Hello friends, welcome again. This is SK Advisory Private Limited. This is the new series of volume and trading. Welcome to the ultimate beginner's guide to volume trading. In this free video, you are going to learn the basic of using volume as a way to confirm price movement or to anticipate market reversals. You are going to learn about volume spikes and volume drops. Standard rules for interpreting volume patterns in all time frames. The relationship between price volume and open interest in the future market and the relationship between volume and volatility we are all also going to study. The most common volume indicators like the volume histogram, volume oscillator, unbalanced volume, the money flow index, the Herc payoff index, accumulation distribution at the volume profile. Before we begin, please remind that this video is made for only education purpose. This is not any investment advice. If you decide to use the techniques presented in here, do it on your own risk. We begin first by the definition of volume. Volume is a measure of how much a market has traded in a given period. In other words, it's a measure of market activity. This measure changes a little bit depending on the market we are talking about. For example, if we are talking about stock, volume is measured by the number of traded shares in a given period. If we talk about futures, volume is measured by the number of traded contracts in a given period. And if we talk about currencies, volume is measured by the number of ticks in a given period. A tick is simply the minimum price change, so tick volume is nothing more than the number of times that a currency has produced the minimum possible price change within a given period. Whether we are talking about real transaction volume, the number of traded shares, the number of traded contracts, or the tick volume, we are talking about measures of market activity. In one way or another, for example, if the total transaction volume is higher, the total number of traded shares or contracts will probably be higher and the tick volume will probably be higher too. In summary, these are slightly different ways of measuring the same thing. Given the definition of volume and the fact that slightly different measure of volume reflect market activity in a similar way, let's begin talking about the simplest pattern we can find in volume. We begin by talking about volume spikes and volume drops, since they are the two fundamentals of volume patterns. Volume spike is a significant increase in volume. To be classified as a volume spike, the volume is a particular period must be a few times larger than the average volume. It's usually something that stands out immediately when we look at the volume histogram. Volume spike means that something significant has happened and many traders or investors have entered the market with a unique few buys. There are basically two types of volume spikes. There is the sudden spike and crescendo spike. That's it for this session. In next episode we will go into the deeper, so stay tuned. If this information is helping you, then do like, share and subscribe to our channel and press the bell icon to be notified on every update from SK Advisories. Thank you.